So we're going to see interest rates going up, and we're going to learn over the remainder of this year and through 2022, how do you and I, borrowers, investors generally, react in a modern environment when we've got rising interest rates. Well, hello again, everybody. We're approaching a pretty interesting time when it comes to the housing market in New Zealand. On August 18, the Reserve Bank is going to review its official cash rate, basically its monetary policy weapon that it can use to influence the rate of growth in the economy by influencing the cost to people of borrowing money and also influencing a bit the rates which banks offer on their term deposits. We've all seen the pretty high inflation number of July 16, and it was about 0.5% higher than people were expecting. So the chances are pretty strong that the Reserve Bank is going to say there's good momentum in the economy. Inflation at 3.3% is well above what they would like it to be, and all of the indicators are suggesting inflation will go higher. And this is where it gets interesting. You see, many of the reasons causing high inflation at the moment do look temporary, the supply chain disruptions, but the longer they go on, the more that people are going to think they are permanent. And in my talks around the country, I'll be noting this is a bit like everything's fine at home, and then your in-laws move in for a few days, and then you notice after a week and a half they're still there, and then after 6 weeks' time they're still there, and that's when you realise they've moved in permanently, they've sold their house. Now this is the risk with inflation, that the temporary sort of visitation can become a permanent thing. So we're going to see interest rates going up, and we're going to learn over the remainder of this year and through 2022, how do you and I, borrowers, investors generally, react in a modern environment when we've got rising interest rates. You see, this is the first time we've had what we economists think will be a sustained increase in interest rates since the period of 2004 through to 2007. And it's going to be very interesting because the residential real estate market around New Zealand is once again gathering some momentum. That's why I've got all these monthly surveys going on of mortgage advisors, people generally, real estate agents, and the real estate agent one I'm going to be releasing fairly shortly with REINZ. And what that shows is, with one of my personal favourite measures, FOMO, fear of missing out, that was running at around about a gross 90% of real estate agents around the country saying, yep, there's FOMO. But about 4 months ago, after tax changes, LVR changes, that fell away to only 49%. A month ago, 60%. It's back up now at 66% of agents once again seeing FOMO on the part of buyers. And in terms of perceptions of prices rising, again, used to be up at 90%, fell to only 30% of agents saying that about 4 months ago. Now that's up at a net 61%. Now, why is this? Basically, listings are in very short supply. There is exactly zero statistical evidence of a wave of selling by investors. What's happening is a lot of investors, they are doing some selling. They were planning to anyway, but they're buying as well. They're shuffling their stock. They're moving to look at getting a new build done. And we've just learnt the number of consents for new dwellings to be built is 44,300 over the past year. So a lot of people frustrated at not being able to find what they want to get built from a builder, 3 years waiting list or whatever. They're going to switch back to looking at the number of listings. And just to finish off with, I guess, some frightening numbers there, the number of properties currently listed for sale around New Zealand with realestate.co.nz is just below 14,000, 14,000. 10 years ago, 48,000. That's the new world we're living in. All the best.